Guys, we're going to share with you what every Tesla investor and person who's looking at Tesla needs to know about their recent earnings report. I'm absolutely shocked by what happened. They missed on both earnings per share and revenue. Let's break it down right now. All right, guys, so here's what happened. The markets were expecting 74 cents per share. They actually reported 71 cents. Missed there. The market was expecting $25.8 billion in revenue, and they got 25.17 billion. Guys, missing on both earnings and revenue. The stock was down to 195 after hours. It's now back up to 202. We're sitting here, and remember, when you make very, very aggressive assumptions about a company, you have to understand, can they still perform? Tesla was the darling of long ago. It had an all-time high of $414 a share. Little over a year ago, it got down to 103 or so. It's climbed all the way back to 300, and now we're back to 200. It has been a roller coaster ride for Tesla, and that's what happens with a lot of hype companies, but it doesn't mean the stock is not investable. Let's go break this down a little bit further by pulling up their quarterly report to see what they actually wrote in there. So right off of their actual report, guys, Q4 and all of 2023, Model 3/Y, all the other models in total. They produced 495,000 vehicles and delivered 484,000. In 2023 for the entire year, guys, 1.85 million vehicles, delivered 1.8. Huge jump from the year before. They are doing a great job of ramping up by building factories everywhere. Tesla absolutely changed the game in the car business. I don't care what anybody says. They absolutely changed the game, and that's a reason why I love Elon and Tesla as a company. But you got to remember, stock and company are very different. Okay, here are some highlights in their profitability. $8.9 billion on GAAP operating income in 2023, 2.1 of that in Q4, $15 billion in GAAP net income, and this is the generally accepted accounting principles, versus 7.94 in the Q4, $10.9 billion in non-GAAP net income in 2023, 2.5 in Q4. Guys, operating cash flow, big numbers here. Ready? Right down here, $13.3 billion. Free cash flow of $4.4 billion in 2023, operating cash flow of 4.4, free cash flow of 2.1 in Q4. So Q4 alone accounted for almost 50% of their entire 2023 free cash flow. As they increase the number of cars going out there, that's big. Now, the issue is Tesla is a $600 billion company generating $4.4 billion in free cash flow, 150 times free cash flow. Is that enough? Remember, it's growing like crazy. So if you have two companies that are the exact same companies, that one's growing at 20% and one's growing at 5%, you should absolutely pay more money for the faster growing business. They have better margins than the vast majority of car companies, and I love that. But it's still a car company, a highly capital intensive business. The Model Y became the best selling vehicle in the world. That's what they're saying right here. Energy store, I don't get the whole energy part, but that's a big part of their business. Let's see a few other things. Guys, everybody who says Tesla is more than a car company. Total automotive revenues. Q4, $21.56 billion. Total revenues of $25 billion. That is over 80% of their revenue comes from the auto industry. So if those of you are wondering, it is still a car business. Are they growing the other parts of their business? Absolutely. And I think they need to in order to justify higher valuations. You need to get to a much bigger profit margin business in order to drive those valuations, okay? Let's go a little bit further. Gross profit, down 23%, not the best. So that gross margin, here's what I don't like, guys. The gross margin, which means for every unit they sell, what percent of it is a profit? It's declining. We went from 23.8% down to 19.3, down to 18.2, 17.9, and 17.6 in Q4 versus that 23.8 in Q4 of 2022. That's a problem for me. I've been saying that for a while. The gross margin was not sustainable. That is a problem for me. Now, it's starting to become a little bit more like other car companies. People should be worried about that, okay? A couple other things. Operating margin, not trending in the right direction. 16%, 11.4, 9.6, 8.2. Almost 50% lower. Almost 50% lower operating margins since then. And operating margin, It's kind of an important factor to sit there and see how is the business doing. So earnings per share is down 40% year over year on the quarter, $1.19 down to 71 cents. Let's see how the stock is doing right this very second. It's back around 200. Like I said, it hit 195 at one point. So let's keep diving into this financial summary. Again, for the entire year, let's look at this. In 2019, 20 billion of their 24 billion was from automotive. Okay. In 2023, 82 billion out of the 96 billion. So here's the problem we have, guys. This was automotive revenue was 84.7% of total revenue. Last year, it was 85.1%. So their automotive revenue is a bigger and bigger piece, is a bigger piece of the company than it was back in 2019. Okay, so for those of you arguing, I have to sit there and say, I get there's possibility this is a tech company, but it doesn't have tech margins. It has a high capital intensive business, which is not typical of tech. And the revenues are 85% last year of total revenues with the automotive industry versus 84.7 back in 2019. All right. So again, let's go to more margins. 16.6 in 2019, 21, 25.3, 25.6 fell to 18.2. So it was growing and it's fallen a little bit. Okay. So let's just go look at the 8 pillars now in the company in our software. This does not include the most recent quarterly numbers, but a lot of shares outstanding. So what they're doing is they're diluting shareholders. So even if you bought the company 5 years ago, you now have 18% more shareholders than you did back then. ROIC is a little low, very typical for a car business. So they're building a lot of plants, et cetera. But the biggest ones are the valuations. 5-year PE is 144. 5-year price to free cash flow is 203. It's probably not as bad as these numbers make them out to be, because if you look right here at the net income over the last 5 years, the last year they did 10.78 in the last 12 months. Previously it was negative. Before then, look at this, negative. So they are getting more and more profitable as time goes on, which I freaking love. That's great. But at the end of the day, how much profit they didn't make. Let's see what analysts are saying about the company. Now here's where I get a little confused. 448 in profit estimated for this year per share, 787 for 2028. And these are analysts who probably love Tesla. And they're not even, this is good growth, but it's not, would you pay 150 times 5-year free cash flow for that? If the company is a $700 billion company, they made 10 billion last year, that's a 70 PE. That's according to Meet Kevin, that's the appropriate PE for Tesla. But look at the revenue growth, 20% a year. But the EPS growth is not 20% a year. Guys, I just got a notification on my phone. Tesla has warned Wall Street that it could sell fewer vehicles this year. I want you all at some point to go back to our Tesla videos and said, things can't grow forever. There will be hiccups. There'll be competition. These things will happen. And people looked at me and said, you're an idiot, Paul. Okay. Guys, when there's a booming business and people want to get into it, it brings up competition. You've seen the price cuts all throughout the world by Tesla. I always said, for Tesla to justify its valuation, it has to sell like 50 million cars a year at some absurd amount of money per car. They've been dropping the price of their car, and in order to sell more and more cars, your average price has to be lower. So let's go to Stock Analyzer tool. But before I go into it, I want everybody to understand that I look at every investment as the present value of all future cash flow. And I'm going to make assumptions here on the revenue growth, the profit margin, the free cash flow, et cetera. These are my assumptions. This is why I encourage anyone in our community out there, when you go into the software, make your own assumptions. Make your low, middle, and high. That's the art of investing. You probably know better than I do about Tesla. I look at it saying it's a car business. I can't see that value. But I've missed out on a lot of it. But at the end of the day, when I invest $1, I want to see how long does it take me to get that $1 back, and then how much can I make in the future off that investment. And that's the way I look at every investment. Now, am I more conservative than most? Probably. That's why I like to do low, middle, and high assumptions. But the fact they just sat there and said, hey, we could sell less cars this year than last year, I'm actually surprised the stock hasn't even down even further. It's still hovering around 200. All right, guys, so I'm going to pull up the last time I did Tesla just to compare it. The last time within reason. November 30th. I did a 10-year analysis. Guys, I did 12 18 and 24% revenue growth over the next 10 years. If you remember, analysts are expecting about 20% over the next 5. So this is still somewhat aggressive. I'm actually going to just temper this a little bit. I'm going to go 10, 16, and 20. Profit margin, I did 5, 10, and 15. I'm still comfortable with that. I think 10% is high, but they did 9.3% in the last 5 years, so maybe it's okay, and it is getting better. Free cash flow, I just mimicked it because I think with how much they're growing, building factories, that's affecting their cash flow quite a bit. So I'm okay bringing it back to normal. Now the question is, what PE should I assign to Tesla at the end of these 10 years? Well, I sat there and said 18, 21, and 24, which is a far cry where they currently are. But just because something's expensive now doesn't mean it'll always be expensive. Do I think Tesla might deserve a higher multiple? Maybe. I'm actually going to do this. I'm going to go 15, 20, and 25. And then finally, for my desired return, I had 12, 13.5, and 15%. This is what return I want on my money. If I can get 9 or 10% in the market, what do I need in order to invest in Tesla itself? I'm going to alter this to a lower return, which is going to drive my price higher. I'm going to do 11, 13, and 15. All right, guys, so let's check this out. Boom. I have a low price of 30, high price of 203, middle price of 100. Guys, this means on the high side, if you bought it today and all the high assumptions occur, you're going to make about 14.75%. Guys, Tesla's a pass for me personally, but if you want to see the 30 stocks I do want to buy, watch this next video.